Welcome to the Bali Business Club podcast. I'm Gawain, and this is Omri.
Hi.
We're going to be discussing Bali, property, investing, and business. Omri's a 30-year veteran, has all the tips and tricks. How are we going to do it?
All right, so hi everyone, thank you Gawain. So I'll keep it short. I'm going to try to explain here my secret formula, my secret recipe on how to make between 5x and 9x on your investments, which I've been doing for a few years now. Wow. And some background nuggets on Bali investment or Indonesian investment stories, what to do, what not to do, and stuff like that.
Cool. See you there. Omri Ben-Canaan. This is the, I think, third or fourth Bali Business Club podcast you've done, yeah?
We've done some before, but we never published them, so I don't know if that's that.
Okay. We might go back in time and then republish them.
Yeah, probably, yeah.
But yeah, so I think we're just discussing today Bali, business life, property, culture, and I think we're going to touch on the Kedungu Fund a little bit, yeah?
Sure.
So you're a long-term resident of Bali, 30 years, yeah?
Yeah.
That must have been quite an amazing transition to see Bali progress as you grew up in it.
Well, it's certainly not the same Bali today as it was when I arrived. And I thought it was quite crowded when I arrived. But back then we were just...
Where did you stay when you arrived?
When I arrived in 94, and we were at the limit of Legian and Seminyak. Seminyak was 2 streets.
So 94, you must have been like, what, 14?
I was
12? Just born.
I was 20.
Wow, okay,
20.
shit. Okay.
Yeah.
So not with parents, with parents?
My father used to live here, so I came just to visit.
So he was doing business here, living here?
Yeah, did business here. I was living in Japan back then. So
sure.
I stayed for a while.
So
but
cool.
yeah, back then there was basically Seminyak was a couple of streets. What is the name? Jalan 66 and Jalan Gado-Gado, Yanapura.
Yeah.
And after Jalan Yanapura was a bunch of rice fields forever until Java. That's it.
A long journey to get to this point. Like, what were the main things that you think has changed? Like, if you could put it top 3 in 30 years, what would you say? Other than obviously the development, which is very visually apparent.
Yeah.
What do you think culturally has changed the most in 30 years?
Wow. The reason for coming to Bali is different today for most people than it was 30 years ago. There were a lot of hippies. They were going
escaping.
Yeah, they were doing like Goa, Kopangan, Bali. That was like the golden triangle of the hippie life,
Okay.
And so there were those guys and the Kuta people, so the Australian tourists, and very, very little expats actually. And absolutely, I mean, the only thing you could do as an expat is either open a restaurant, but there were very few of them. Or do furniture business. But there was almost no property business back in the day.
So no
we had no idea Bali would become like that. I mean, I remember some friends that bought some beachfront land, probably, I'm not sure where, but probably around here, for like $10,000-$15,000, and we were laughing at them. So we really had no idea. We thought these guys were crazy to buy land 10 kilometers from the airport or something like that. Whereas today we are 20 kilometers now.
Yeah. So what were like the first businesses for expats specifically that started first getting traction? Like tourism, development, F&B?
Bali was very much furniture manufacturing place before.
Oh really? Okay. So that was its first thing that actually took off.
Yeah.
Oh wow.
My father was into that as well. Now I don't know anyone that does furniture. And also like with internet coming to the island around 15 years ago, the landscape has totally changed in terms of so many digital nomads, so many internet-related businesses. Okay. So it's completely different than before.
Have you seen it influence like the local Balinese culture and religion, etc.? Have you seen that being like a net positive or a net negative, or do you think it coexists really well together? Or
it has always coexisted well. Balinese people have, I mean, you know how Balinese are. They're super friendly and welcoming, and I think it's their approach to tourism is very, in some ways, very smart.
Yeah, I think like the tourism statistics were quite amazing. It was like 5 million foreign tourists, but it took it almost double as far as like local tourism visiting Bali. I had no idea of those numbers, but it's like it was substantial. You know? A lot of local tourism.
Yeah, and Indonesian government has a very, very strong policy in terms of getting more and more tourists, not only from abroad but local as well, you know, nationally. So they have a really aggressive policy towards you know, making Bali worldwide known
Destination.
You know? Yeah.
So the evolution from like Seminyak, Canggu, Berewa, that must have been quite an interesting kind of development progression to witness. What did you gain from it? Like, what did you learn from that kind of? How Bali is quite unique in its way that it develops west or south, around from a ground zero, you know?
Actually, Seminyak got extended over the years because the name is trendy, so everyone called they built a villa like in Petit Tenget and they said Seminyak. I don't think it was actually Seminyak, but now it's officially Seminyak. Yeah. So, I mean, it took so many years to build, to develop. Sorry, I mean that whole area. I didn't think back then, and I remember like around the year 2010-ish, that's when Seminyak really was almost full, 10, 13, between 10 and 13. And that's when it started to spill over the Canggu. So in around 2013, 2015, the tourists, I mean the Western population or, you know, tourist population and expats like from Seminyak started to spill over the Canggu slowly. Yeah? And I think it's around 2015, 16, then it really started to go crazy. It wasn't very clear how the trend was. You could see a trend, but there wasn't enough historical data to make a graph and say, okay, this is what's going to happen in 2 years, in 5 years, in 10 years. Yeah. Whereas today we have this data. We've seen it. We've seen Seminyak. We've seen Brawa. We've seen Batu Bolong. We've seen Perenan.
So
we're just following the course. Of course, one thing to understand is that wherever you have surf will develop first.
That's actually my next question. A region developing around a surf spot, I kind of got it, but I didn't actually understand until I really started looking at it, the gravity and how much that actually gives that area or region its core residents. And everything grows from there. So surfers are, especially in Bali, are the pioneer residents in an area. And they build the coffee shop next and the surf rental shop, and then, so really interesting concept. I'd never thought of it before you mentioned it.
I mean, if the break is good, if the surf is good, then it's going to develop. If the surf is shitty, it's not. I believe in Sese you have like a tiny wave, but it's really, really bad, right? So it's not a surf area. But if you look at, so Seminyak surf is great, and then you have Canggu, Batu Bolong Brawa, and then you have Perenan, and then you have nothing until Kedungu. So Kedungu is starting to develop now, or has been started about a year ago, and compliments to, I mean, the first half the population of Kedungu are surfers today. If you go to Kedungu in the morning, and I know you've been there many times. I saw you there.
Once or twice.
I saw you there.
Hiding in the bushes.
So you have all these APV trucks with a bunch of surfboards on top. All the schools are going there. So because you have this population there, I mean, you need to eat and drink. So you have a couple of restaurants and then a few guest houses, and then it starts. So the surfer population is really here to kickstart the development of an area.
What would you say, both to the communities, government, developers, what are those challenges that have happened to date? And do you see those challenges moving forward, or do you see some of them actually being resolved and kind of dealt with when the development moves further west,
Interesting question. So I think the community can be part of the change. And if we take the example of Perenan, where we moved about 6 years ago, when we came here, it was less developed than Kedungu. It was a giant rice field. There were two cafes.
Oh, really? So 6 years ago, this was less. Perenan was less developed than Kedungu.
Yeah, but basically that was it. I mean, 5-6 years ago, you would see a bully in the street and you would say hi.
Yeah.
You're like, what are you doing here? You know, you're lost or something. You know. So yeah, it does. It does bring its challenges. And one thing that we started since the very, very early days of us moving into Perenan, Kosong Satu group, we started a WhatsApp community. Yeah, with a friend of mine, Dodo, who is a part owner of La Brisa and Woods. So we started this community. In the beginning, we were like 15, 20 people in the group, and then we decided to, as a community, to help build the shortcut between Perenan and Padang Lejong.
Yeah.
So we raised money. I'm the treasurer of the Perenan community. We raised money. I think it was like 450 million something, and we built that shortcut. You know.
Yeah, that was a game changer for Perenan.
That was a total game changer. Yeah, and that was the idea. So yeah, as a community, you can do stuff. That's I mean, people organizing into a community and being able to have a real tangible action on the neighborhood where they live. So, I mean, I was part of that experience here, and now what I'm trying to do is, reproduce it in Kedungu. You know, yeah.
So your personal in kind of property investment journey, it's been what, 20 years, 15 years from, I presume, one of the first properties you bought. I mean, that must have been educational from early days.
I've made mistakes.
One or two mistakes, I'm sure, along the way. Explain that whole, in a nutshell, buying property directly in Bali as an investor. What are your opinions on it? What are the red flags? What are the green flags?
Wow.
Yeah.
All that. Do you have time?
And go.
Do you have time? Well, the first property I bought ever was in Gili. Gili
Which
Air.
one? Oh, wow. Oh,
Yeah.
wow, okay.
I bought 20 out of
20
lands.
ara. Wow, massive. Yeah.
And bought it for 49 million per ara. That was in 2012, 10, something, I don't know, like 14 years ago, something like that.
Okay.
And sold it a year later, not even a year later, 49.85. 49.85, yeah.
So it doubles. I mean, you're probably not used to any property deal that doesn't double.
As a rule of thumb, I don't invest if I don't double in 3 years. That's my minimum.
But I can imagine most is 2 years double.
I do usually more better than that, but that's my
baseline.
That's my baseline.
I mean, as far as like property investment goes, that's unheard of.
Not in France, where I'm from, you know.
Not in France. Well, not as in not in Europe, nowhere.
Nowhere in the
world.
world.
I mean, maybe anything that touches that. Dubai in the last 10 years, I don't know. Nobody's getting that price. Like, where else is even competing with that kind of value?
I don't know. I'm sure there are places in the world where
like little pockets or a neighborhood or something. Yeah,
well, like Bali, you know. So Gili was my first land.
Yeah.
And then a friend of mine came. Then I bought another land in Brawa, which I still have.
Okay.
I bought a land of 10 ara plots in Brawa, which was a yellow zone. And what happened to me is that the government turned the yellow zone into a green zone. Usually it's the other way around. Bad luck.
Oh, wow.
My second land.
Oh, wow.
And they turned it into a green zone.
Sure.
So I do own a piece of green zone
but you can't do anything
in the center of Brawa, which I can do anything with it.
That's crazy.
Or not much. Yeah.
Wow.
So I sold some of it. Not all was turned green.
Yeah.
But I sold 3 ara, and I have 7 left. If you want to build a hut, be my guest.
A shack, yeah.
I'll do a good price for you.
And we'll get into that, commercial, residential, and like which one you prefer. But I see another issue that a lot of foreign investors make is, buying a beautiful rice paddy view, and then 2 days later, you've got a massive.
Of course. So this is one thing you should forget about. If you're building, if you're building within the like 3 kilometers from or 3 or 4 kilometers from the ocean, from the shore, you should forget about the view because it's going to get built no matter what, except in rare occasions, rare cases.
Yeah, unless you're in front of like a green zone or something, which is something I've been looking at.
Green zone will turn into yellow zone at some point. No. I mean, how many green zones do you know in Kuta or in Seminyak?
True. Whereas they're all over the show, further out.
So in Kangu you still have some, like my land is on green zone, and now they're building. Everyone is building around my green zone land, which so it's going to turn yellow. No, it's not a matter of if, it's a matter of when.
So that's your personal property kind of investment history, and I'm sure there's lots after your Berewa property. When did you start getting into? When did you see the gap for the Kedungu Fund, and how does that work, and the vision and the purpose and the opportunity that it's there to service? How did you see that?
I think perhaps before we go there, we should talk about how I got into understanding where is the best to invest, as opposed to going mainstream and investing where everyone invests. So I like to call what I do pioneer real estate. So after those Brawa land, which was a massive failure, still there if anyone interested, it's for sale. I started investing in Sumba.
Yeah.
And me and a friend of mine, Hussein, we bought hectares, dozens of hectares of lands. We used to buy the 1 hectare of beachfront land for $10,000, 150 million rupiah, back in the day, and sell it for much more. Yeah. So we've probably like sold around 300 hectares of land there.
Oh wow, that's a lot.
Yeah. But what's interesting with that experience is I understood when we started investing there, everybody was laughing at us. So it was a mix of us being visionary and having a lot of chance, a lot of luck, but as it happens, there was no better time to market than what we did. We started to invest, and then it started to grow, and it went from $10,000 an hectare to $200,000 in a matter of years, like very, very fast, few years only. Yeah. And I realized, as opposed to my little friends in Bali that were buying land in Seminyak, back then it was Seminyak, buying land in Seminyak and making 20% or something like that, I was making like 300% or 500%, it was ridiculous. In a matter of months or years, it's super fast. I realized that's when I understood there was a way to make much more money by land banking than just your typical, today buying in Kangu or in Berewa, which to me doesn't make sense. Yeah.
So what's your secret sauce?
Well, you just have to study. You have to understand why a region is going from emerging to mature in so many years. Yeah. You have to understand what makes a region attractive to tourism growth. So surf is one thing, but so it's surf all over Indonesia, and then following the coast is another thing, and then you have to understand why it's the development is which direction development is going. So in Bali, for me, it's quite simple. You cannot build upward, so development will be horizontal, right? And as it's following the coast, so there's basically like 3-4 ingredients. First, government is increasing tourism as we speak, more and more. Jokowi promised to double the tourism in his first year of his first mandate, and he did it short of 100, I think, because of COVID, 100 or 200. So aggressive policy from the government. Then buildings cannot go above 50 meters, so development is horizontal.
So that's
no
a national, that's a Bali rule through and through, and it's not going to change, or it's not in the pipeline.
It's supposed to be revised, I think, in 2 or 3 years.
And that's as high as
it change? I don't know, but it's supposed to be revised.
I don't think that would change. I mean, that would be a big negative on things.
I don't think so. I think they should change per
Think so?
zones.
Yeah, maybe if there's a city, they would see something at
Like
a city center.
allow 30 meters in Kuta and 50
Yeah.
meters in Changu, for example. Yeah, so you can build upwards.
True.
You
Yeah.
know? So you have this factor, this law about building and development going horizontal, and then you have the surf. So if you look at where, if you're trying to understand where it's going to develop next, you just follow the coast, look at where the surf spots are, and this is it. You have it. Because there are more tourists. I mean, you got to put these people somewhere, and because you cannot put them in high-rise tower, then it's developing westward.
Yeah.
So Kedungu is the obvious answer to that question.
Yeah.
And then after Kedungu will be Yeganga, and so on and so on. You know.
Yeah. So that's your kind of underlying investment thesis for both
That's
personally.
the recipe. It worked so far.
Yeah.
You know?
But there's obviously a short time frame for that. You've got, what, 5 years for that kind of period where something starts to take off to where it reaches maturity.
It takes about 5 years.
Yeah.
Changu took 5 years. Now Changu is about 8 years into development. Something like that, 8-9 years. Yeah. Perenan is 5 years, exactly 5 years.
5 years into it.
Yeah. So now Perenan is super mature. Yeah.
Okay, so regional escalations in prices. Obviously, it's from Changu, Seminyak, Perenan. Explain how this works. Entry points, exit points, how you figured it out. Because I've never heard it before. This is the first. So, how did you put it together?
All right. So, I guess this is why I have my iPad here. Let me show you what no one in Changu in the mainstream real estate business has understood. Okay, and this is how I make real estate investments. So you basically have you have here your dollar axis and then your time axis. We're going to put a little T here, little dollar here, and then take another color so it's easier. Boom, like this. So basically, in Bali, the land price remains stagnant for years and years and years, which is around 3 million rupiah per ara per year. 1 ara is 100 square meters, until there's an interest for the region, and it starts slowly to pick up. Not slowly, it starts to pick up. There's an uptick, and then it goes up and up and up and up and up super fast for a period of about, what happened here? I don't know. For a period of about 5 years until it plateaus again. Okay? So that's 3 million rupiah. Here is around 40 to 45 to 45 million rupiah. Okay? And where I invest, my sweet spot is around here, around 5 million rupiah. So
And 5 million rupiah is what in dollars?
Around 300. Around 300. 300 something.
And an aura is how big?
Sorry?
An aura? So it's 5 million rupiah or 300 USD
per
aura.
1 ara is 100 square meters.
Okay.
On the ground. So basically, I wait until it's at 5 million rupiah. This is for me proof of concept. It works, and it's gonna. It means like the growth has started and it's not gonna stop. Yeah. So that's for leasehold, obviously. Yeah. What you have here, so that period of time between that curve and the when it starts to plateau is 5 years. Okay, it just takes 5 years. So from Changu started to develop about 8 years ago. Changu is now is here, somewhere around here. Yeah. Perenan is exactly 5 years ago. 6 years, 6 years ago. Let's say 6 years, yeah. So Perenan will be like somewhere around here, yeah. Basically, let's look at first compare the leasehold with the freehold. So that's 300 million rupiah per ara. If it was freehold,
3 million rupiah per ara.
3 million rupiah, sorry,
Yeah.
3 million rupiah per ara. If it were freehold, would be around 250 million. 200 million, 250 million. That 5 million is around 300 million, yeah, ish. And then when it plateaus, so this is 1.5 billion rupiah, yeah. So that's $100,000 ish, yeah. So basically, if you look at the different values, so the leasehold would have done here around 9x, okay? The freehold here was on 5x, okay? Both are very good investments. However, one is better. So the rule of thumb to understand here is that in emerging region, it's better to acquire leasehold in the early days of the growth rather than freehold, because you will immobilize less capital and your multiplier is bigger, 9x versus 5x. Okay?
Yep.
So I never buy freehold. I never invest in freehold in emerging markets. If you buy in Kangu, in Babakan, in Seminyak, sure, no problem, you know?
When you say emerging market, you just mean emerging region.
Yeah.
Emerging market, yeah.
Yeah, region, yeah. So yeah, if you buy in mature markets, sorry, in like Kangu, Perenan, whatever, yeah, sure, you can buy freehold, it's not a problem, yeah. But if you buy in Kedungu or Yeganga or you know, these kind of regions who are going to experience a very, very rapid growth, it doesn't make sense to buy freehold. You can make way more money, generate way more profits by renting the land, by leasing the land. Yeah.
And what is typical for a lease? 25 years, 30 years?
So what I try to do is 30 years plus a 5-year extension, okay, at a guaranteed price of original price plus 30%. And that option is only valid for a certain period of time, which is like 3, 5, 7 years, something like that.
Into the initial period.
Yeah. So basically, today, let's say I lease the land for like, let's say 10 million per ara, yeah, per year. So I lease the land for 10 million per ara per year for 30 years. And in the contract, what I always try to do is to have an extension period of 5 years, so from 30 to 35 if I want to take it, okay, for a price of 10 million per ara plus 30% is 13 million per ara. So basically, I promise the owner of the land that within the next 5 years or 3 years or whatever, if I will take that an extension period on that land for 13 million per ara, which is 30% more than the original price of 10 million per ara.
But when you're talking about these kinds of escalations, it's almost nothing.
Really. I mean, it's ridiculous. 5 years
well, I think the
later.
leasehold as a structure keeps the landlord, you know, the property will always remain within the local community's hands at the end of the day, generational wealth.
Absolutely.
It's not like other countries, Africa or etc., where the land just goes.
Yeah.
You know.
I think it's a great system because the landlords lease the land, so they get a bunch of cash, which they use to buy another land or to build a house or whatever. And then 30 years later, when their son is like, 50 years old or 40 years old or something, then they inherit not only a land that's worth a lot of money, but a bunch of buildings on top of it.
Yeah. I mean, it's
so
it's
they
a
are
great
set
system.
for life. You know?
I mean, the UK monarchy perfected that system, so
it
definitely works. 300 years of owning all the property, prime property in the UK. It's a system that works.
Something similar. So if you look at that graph here, that graph is the roadmap, the blueprint, to investing in Bali in emerging areas and make great profit.
So this same graph applies to Seminyak, Kangu, Perenan, and it will apply to Kedungu.
So and it's always the same. It's not. There's no surprise here.
Yeah.
What I don't understand is that they didn't understand it. None of them. Everybody is investing in small Airbnb or small land, in middle of Kangu or middle of Seminyak and make 15% profit, 15% ROI. I mean, to me, this is really boring.
Well, I just think it's your appetite, risk, and if you want passive income, etc., etc. I mean, this great as far as like actual value escalation, but your entry and exit points are critical.
Yeah.
Importantly, your exit,
Absolutely.
and being able to, in this market, you can get rid of and exit your assets at a certain point in time at the top, which I suppose is kind of the underlying theory of the Kedungu Fund is the 5-year investment horizon.
The whole Kedungu Fund is based on that graph, basically. That's the key. That's the blueprint of the fund.
As in how it will increase value for investors.
Absolutely.
Yeah.
Originally, the fund, the Kedungu Fund, when we started it a bit over a year ago, development was not part of the equation. We are just land banking. It was just about applying that graph to the capital the AUM.
Yeah. But if you don't develop the land and you just do land banking, it will slow the regional development down. You have to develop to get a critical mass of investors to. You don't have to, but if you do it at a larger scale and your AUM increases 20, 30 million, you just be stuck with a whole bunch of undeveloped land, which is not good for the area.
I wouldn't say that. I would say I don't think it will slow the region down because the region is big. So our impact on the region, as far as slowing it down, I don't think it would slow it down. Now, by developing other buildings other projects than villas, like we're developing a school, shopping plaza. We have a medical center in the works and a few F&B and high street retail shops, retail businesses. So this is accelerating the process. Don't get me wrong. If we weren't in Kedungu today, Kedungu will still grow.
Sure.
No question. Yeah, but our action will probably increase that growth by 10-20% or something like that. Yeah. So that's the only thing.
And how many properties is currently owned or in the portfolio, and how many are in development? And you mentioned school, plaza, etc. What else? How did you get to those decisions, and what else is in works? Like, how?
We have currently around 11 properties that we already acquired, or I think 12 are already acquired or in process of being acquired. The school construction has started 3 weeks ago, a month ago now. It's meant to be finished beginning of 2025 for an opening of the school in August 2025.
Okay, so you're building things that are critical to the community.
Yeah.
It'll increase the regional value of things because you'd have a community that actually resides there, doesn't leave, and develops. Yeah.
Correct. So the business model behind the school, actually, if you just think in terms of bottom line, like bottom line dollar, the school is not as good a business as building something else, maybe residential or something else. However, it brings that school goes to grade 1 to grade 6, from grade 1 to grade 6. So that's about 100-ish students. So around maybe 80, 90 families, and they all need lodgings. Yeah. Somewhere to eat. Somewhere to buy stuff, and brings awareness to the region and traction. So controlling some aspect of the school. Not all, of course, because we are not running the school. There's a company running the school. I mean, the fund is not running the school. Enable also to have access to this pool of expats who are also investors because they need to, live somewhere ahead of their journey to Bali. They're coming to Bali. For many of them. The schools, I know that because we are business partners with the French school and with one of our companies, and we see how things are done. So the kids are being enrolled maybe like 6 months to 8 months before actually the start of the year. And for many expat families, it's before actually coming to Bali. So getting these families on the table, talking to us before and able to, upsell. Something like houses and villas.
Genius little strategy.
Well, I don't know, genius, but
who came up with it?
Genius, but very humbly.
Okay, I get that. Yeah. So all bases are covered. You've got everything in your portfolio that kind of mitigates risk, I suppose, from commercial, residential. What else is in the pipeline as far as any more land acquisition immediately?
Yeah, we're targeting. So 2024, our target is 20 million. Now the fund is worth $2 million. Yeah. Our target for 2024 is $20 million. So we're talking to different players in various countries to that extent, regard. Those $20 million will be broken down into 13 million acquisition, around $5.5 million development, and the rest is OPEX. So we do intend to acquire lots more lands. We're just waiting for the funds to do it.
So land banking will still be a core tenant of the
Absolutely,
fund.
absolutely. I mean, we could not, with $20 million, we couldn't develop all the lands that we acquired.
No.
We need much more money.
And resource also.
And resources, of course.
Okay. And then, so you acquire, develop intensively for 3 to 5 years, and then exit.
Yeah.
So exiting, let's say 15, 18 properties at the end might be a bit of a...
It will be much more than 15, 18.
Okay.
It will be like more like 3-4 hectares. So I don't know how many properties is that, but a lot more. Yeah.
Okay. But you would need to, the whole thesis of the fund is to exit when you hit the tipping points of escalation at the end of the 5-year period.
Sure.
Would that be difficult to liquidate at that time, or do you think the market will be so mature and ripe and demand?
So absolutely, so the market will be very mature and the demand will be there. That's for sure. Like the same way Perenan is mature now, or Kangu like a few years ago. Everybody wants to be in that place.
And would you sell to a fund or a consortium, corporation?
Absolutely. So our exit strategy is threefold. First, so the land bare land that we didn't develop, we'll just sell on the market. Yeah. As we also operate Kedungu Real Estate, which is the only real estate agencies there, we have a very strong base of leads and clients to that purpose.
Okay.
And we will have even more in 4 years. Yeah.
Okay.
So that's the first one. The second one is we're going to create another fund on the next region. So probably we haven't done it yet, but probably called the Yeganga Fund. Okay. We'll probably create it around 2027-ish. Yeah. So our current LPs, limited partners, will be invited if they want to, either to exit or to follow a transition to the second fund.
So you could technically sell assets from this fund into another fund if the investors...
And that's the third exit strategy. So the assets that are generating high income, such as the school, probably the
F&B, whatever.
F&B, or everything that's high street retail, will be acquired by a secondary fund.
Will be an option, I presume. An option to be acquired.
If it's generating good enough money, good enough, then it will,
Okay.
Yeah. So that's the strategy for, and that will all happen between 2027 and 2028, 9. Yeah.
So ROI is something I get asked a lot in regards to this fund.
Yeah.
I think 43% was the last 2023 published.
Correct,
I think to date it's pushing 45, 46. Correct me if I'm wrong.
Something around those lines. Yeah.
So how? I mean, I get it because I'm looking for 2 years in or a year in on your uptick, on your upswing. Maybe just talk around that a little bit. 43% does look, great for a year. Net ROI in a year.
So how is it calculated? So basically, we're working with an official valuer called KGPP, which is a valuer for CBRE. The only one in Indonesia, the only one in Bali pertaining to real estate. It's government,
So government evaluate, and they do it quarterly. So they look at they look at properties around.
So it depends on the properties. So we have quarterly valuation on some properties, some that are in construction. It's in the middle of the construction, so it really depends on the property. Yeah. But we have a deal with them so they do the valuation of the different assets that we own. Whether it's today we don't have a business yet because the school is the first one, but it's not finished yet.
Yeah.
So today we have a lot of land and construction sites. This is the assets that are owned by the fund. Yeah.
So another question I get asked a lot, talking about income generating assets. Can you get dividends in this fund? Like how does that work really?
Sure. So let me just finish on the first question.
Yeah.
So KGPP does the valuation of the asset that we own, and basically we apply that valuation to. I mean, it doesn't change the net asset value per share, and this is how the increase in ROI happens. Yeah?
So they do the valuation, which then you pull back into share valuation, which is the NAVs or so any new investor onboarding would then be subjected to that share price if they wanted to buy in at that time.
Absolutely. Like
so
today, the
essence.
share is $83.6. That was from the last valuation in March. So we're doing a new valuation in June, in a couple of weeks. I mean, we are releasing it.
Okay.
And the price of the share will increase. I don't know how much yet, but probably around.
So best to invest now.
It's better to invest before we increase
valuation.
Yeah, exactly.
Yeah. Okay.
So it's better to invest before the third week of June.
Yeah.
Basically. Yeah.
So then, if somebody is keen to invest, they've given a share valuation, they're happy to buy in at that. What is the ticket, like the ticket amount, and what is the onboarding process? How easy is it? Because going back to our other point around, the risks and difficulties of owning a property in a foreign market, especially Bali. I can imagine some red flags, especially if you don't know the market, legal process, bureaucracy, etc. I presume that process is easy to onboard. You've got a Singaporean investment arm or company, so it's all done for you, really.
Yeah. So the way the fund is structured, sorry. So the fund is incorporated in Singapore. Okay. So the LPs become shareholder of private limited in Singapore. That private limited.
Why Singapore? Just out of interest.
Couple of reasons. First, the onboarding process in Singapore is way easier than in Indonesia. In Indonesia, you have to come and sit down in front of a notary.
So it can't be remote.
You have to be physically present. Yeah. It's very, very complicated. Singapore, it's all online. It's fairly easy. So we use a corporate agent there that handles all our corporate documents that makes the link between ACRA, which is the corporate arm of the Ministry of Finance in Singapore, and us basically. So so that private limited in Singapore controls a PTPMA, so a foreign-owned capital company in Indonesia, and that PTPMA do all the operational, lease the assets, sell the assets. That's the fund. The ManCo, which is the management company, which is us, the fund manager, is also a shareholder of that PTPMA, 2%. So private limited in Singapore owns 98%, and the ManCo owns 2%.
Okay, so the ManCo is definitely directly incentivized for the success of the fund. I mean, that's how.
That's how all ManCos work in the world. You have some fees that cover for expenses, and then you have the performance fee, and this is where the money comes from.
Okay, so easy access into Singapore. I presume KYC is not particularly onerous. Tax benefits also with no dividend.
So KYC is done by Singapore. Okay, so if you want to join the fund tomorrow, we sign an investment agreement between you and us, and then we KYC. You start the KYC process with our corporate agent in Singapore. Once your KYC gets green lighted, you transfer the funds to our bank accounts. With that being
in Singapore,
in Singapore, with that being credited, actually you can send also to Indonesia. It's possible.
Oh, okay.
To the
you just issue the shares without.
Yeah.
Yeah,
So
okay.
once we get the fund in, the capital in, we send the proof of payment to the corporate agent, who gives it to Accra, and then the share certificate is issued. That's basically how it works.
Okay.
The whole process takes about between 2 to 3 weeks, ish. It depends a lot on Accra actually.
Okay.
Yeah, because
Okay.
the KYC can be tenuous. If you invest as an individual, it's very fast, like 3-4 days. But if you invest as a corporate entity, it's a bit longer. If your corporate entity is owned by other corporate entities, then it's even longer, and so on and so
Okay,
forth.
yeah.
Because you have more and more people to KYC. Yeah. So that's
Okay.
it.
Okay, so then, yeah, I mean, it's a pretty straightforward
Very straightforward.
process.
Yeah.
I mean, I don't think we should, or there's, I'm sure, protection, risk mitigation strategies, feasibility studies, all those kinds of things, high watermark, clawbacks, etc. I don't know if we should or have the time to drill down into
I
those.
think
We'll leave it for
we'll do that another time.
yeah, another.
Yeah.
We can get into the nitty-gritties and the technicalities behind.
Well, you can
the
see
actual-
everything on the website. Yeah.
True.
Yeah.
But I think it's probably worth a talk through.
Yeah,
at some
absolutely,
point.
absolutely.
Yeah.
Yeah.
But yeah, I think, I mean, from my side, I understand, a lot more around Bali property market environment and how you've related and built in the Kedungu Fund to kind of capitalize on that with easy access for foreign investors, which I think is kudos to you. I think it's a great idea and is effective.
Can I put you down for $100,000?
Where's my wallet? Where's my wallet? I've got to check.
I'm not sure you're going to pass KYC though.
Yeah. So yeah, I think.
I think one thing we could add is that the entry ticket is quite low at the moment.
Oh, did we not touch on that? Yeah.
Yeah.
Good. What is the ticket level?
So we are at $30,000 minimum at the moment. Yeah, it will go up. Probably go up. It was higher before, and then we started a B2C campaign. So we decided to lower it a little bit. So, but that's not going to last for very long. So at the moment it's 30K USD. We'll probably go back up to 75 or 100K in 1 or 2 months. 1 month probably.
Okay, so when you redo the valuation, you might go up as far as ticket.
We are thinking about it. Yeah.
Okay.
That was just 1 or 2 months tests.
Okay. Well, yeah, I think that's it.
Okay,
I got
that's
no
it.
more amazing
We've,
questions for you.
We've talked about everything.
Pretty much.
Okay.
All right, thanks so much for joining us on the Bali Business Club podcast. Subscribe over here if you'd like to see us again. We're on all the podcast channels, all socials. And then thanks for Omri for joining us. Tell us a little bit about the Kedungu Fund and how people can get involved.
Yeah, thanks, Gawain. Very cool. So all the information will be here. I don't know what camera I'm looking at. This one or this one? That one? Okay, sorry. Hi, guys. So all the information will be down below. If you want to contact us, you can write to us on the website, thekedungufund.com. The deck, we have a deck which you can download on the fund. And I'd love to have a meeting with you if you want to have a coffee, if you want to come to Perenan.
Yeah. Or set up a Google Zoom or anything like that.
Definitely.
Easy. Yeah.
Easy. Thanks, Gawain.
Thank you.
All right. Bye, guys.